Amazon 87%, Alphabet 50%, and Facebook 70%. Are these things set up for a fall, or are they going to remind us why those gains happened in the first place? And as Weiss said, it's a blip, if anything, and they just continue to march higher and carry the overall market with it.
Well, I think, Scott, that this is an important day, but not to the extent that this determines how investors are going to feel about the year. These companies have been able to sustain their business. They're resilient. Everyone's engaged on social media. People are buying things online. Of course, they're having better years and better quarters than the rest of the economy. And if they go down, we have seen enormous amount of buying power coming into the market, and they swoop in and buy these stocks on weakness, which I assume would happen if there was a sell-off, because, as you pointed out, the least successful of these is up, in 13-14% range, and Amazon into the 60%. The market is flat for the year. What's more important, and by far the most important data point this year, is when there's a phase 3 study, a clinical trial that shows a vaccine works. If that happens in 2020, that is the most important day for investors of 2020.
Josh, what do we expect tonight? Are these things, as Kramer says, up too much?
Well, without a doubt, they have to justify substantial, not just runs in stock price, but runs in valuation. And I guess those two things are on a parallel track. But they have a lot to justify. I think the most interesting thing that can happen, and this is not what I think will happen, but if you ask me, is this a big deal? It's a big deal if they all have great results and their stocks go down anyway. To me, that would be more concerning than any other potential outcome. But I don't think that that's what will happen. It's odd to see companies that everyone agrees are doing well, then they come out with great results, and the stocks get even more rewarded. But that's what we've seen overnight. And I know we're going to talk about some of the other names that have already reported. But that has been a continuing pattern. And so the only interesting thing that I think could happen is if investors say, okay, it was great news, but I'm selling anyway because pick your reason.
What does that mean, Josh?
Gains already.
What does it mean for the overall market if that scenario, however unlikely you think it may be, if that happens? What does it mean for the rally that has gotten us to where we are today?
That would be very meaningful, Scott, because these stocks, the four of them collectively, are, I think, almost 20% of the S&P. So if, in fact, we saw investor disinterest after great news and stocks declined, I actually think that would be concerning, because then you'd have to go to the second tier and the third tier and say, well, wait a minute. If we're overpaying for the best companies in the world, maybe we're overpaying for the second, third, and fourth best companies in the world, too. But again, that's not what I think is going to occur. I think these companies will have phenomenal results and will go a long way toward justifying some of the multiple expansion that we've seen this year.
Court, Facebook is your biggest position. What are you expecting tonight? Are you nervous going into the print?
Oh, absolutely not. I think that Facebook, again, is a market leader. At Loop Capital Markets, we actually recently just did a survey of agencies and brands to talk about exactly where are they spending their dollars. Facebook is by far the #1 platform. And even with, what's happened with the boycotts, et cetera, 3/4 of them do not expect it to affect it because the platform is just too amazing to go elsewhere. I think somewhere around 2/3 of the brand and ad agencies stated that their dollars would be going to Facebook. And then the last third, Steve Weiss, your favorite, Google and YouTube. So I think, as we look at these earnings today, unless something catastrophic has happened, which I doubt, I do not expect these names to trade off. In the aftermarket, as you think about retail investors and some smaller institutional investors, you might see some movement around earnings here. But all of the large institutional investors, as we talk about all the time on the show, north of 60% of asset flows are in passive mandates. Those guys can't sell out of this, right? So they're rebalancing against where they are positioned within the indices, and they're going to be there. And if you're a growth investor, you want to be with the leading names in tech, and these are these guys coming and reporting tonight.
But, Court, I mean, you can't ignore the fact the stock's up 70% from the low. Is Facebook.
You can't ignore it.
For all the reasons that you just said, right? For all the reasons that you just said. It's the leader, it's this, it's that. That's why the money's flown into that space.
And it's going to, but Scott, it's going to continue to flow there. That is my point. Where else are you going? Where are you going to get the ROI on your ad spend outside of Facebook, outside of Google? You can say, yes, I'm going to trim Facebook and I'm going to go to Snap and Twitter. And I think those names are going to get a little bit of a bounce as well. They're not names I want to be in, but they're going to get a little bit of a bounce from some folks taking ad dollars and moving away. But the highest ROI that advertisers and brand ambassadors are saying they're getting are from the Facebook platform. You can't beat it. You cannot beat it. And in search, it is Google. You talk about Amazon, you talk about Alphabet. You talk about Apple. You're talking about market-leading companies that are not kind of sitting by the wayside right now and saying, oh, we're leading, we're going to sit back. They're constantly thinking about how to evolve their platform, and these are growth companies that you want to be invested in. Facebook still hasn't monetized WhatsApp. Still hasn't monetized it, right?
Hey,
so
Scott.
let's think about what that looks like 2, 3, 4 years down the line.